me is mercenary geologist Mickey Fulp. Thanks so much for coming today.
Thanks a lot, Charlotte.
Of course. And we're here at PDAC, very exciting. You spoke earlier today about why you don't own mining stocks. You made the distinction between speculating and investing and suggested that mining is usually a speculation and not an investment. For those who were here or missed it, can you just briefly explain that idea?
Well, I really don't think mining is, it's neither an investment. Investment implies that you're making recurring profits over the life of your holdings, and mining's been an extremely bad business over the last 15 years, despite the fact that 11 of those years were a raging bull market for gold. So I don't like mining companies. I don't own mining companies. Certainly they are not investments, and I would not even speculate in mining companies, but we need to separate the idea between exploration companies and mining companies. 90% or more of the companies on the floor here will never mine, produce anything. They're exploration companies. So you want to speculate in exploration companies, not invest in mining companies.
Okay, I think it's a good distinction for people to be aware of. And it ties in a little bit to all of this, all of the big mega mergers that are going on. Since Barrick made its bid for Newmont, Mark Bristow has spoken to the value of being a big company, a big miner, saying the gold industry needs generalist investors back in the space. Would you agree, given your thoughts on speculation versus investment?
I don't see, mining companies have not rewarded shareholders since the bull market for gold started in 2003. So I do not really understand how becoming bigger is intended to reward shareholders.
Right.
Certainly they will cut their staffs, they'll cut some redundancies. I dare say they won't reduce their G&A. And I guess I really don't buy it. I've been an outspoken critic of all these mergers. The Barrick Randgold made some sense to me because of the majors over the last 15 years. Randgold has performed better than certainly Barrick or Newmont or Goldcorp has. So, but still, they just, the business model of growth as a growth industry. Mining is not a growth industry, it's a value industry. And so I don't really see how that will change.
Okay, let's shift over to uranium, which is a topic that our readers are always excited about. You mentioned, I think at the end of last year or when we last spoke, that it was a standout performer in 2018. We haven't seen too much upward momentum this year, I don't think, but do you expect this to continue to be a good year? Well,
so it hit $29 5 or 6 months ago, and it's really vacillated in this very range-bound level from $28.50 to $29 and change over the last 5 months. Last week it took a big hit, dropped $1, and so I immediately called some of my insider sources in the uranium business and said, what's going on? Did Cameco sell a big chunk? Because that's what Cameco's doing, is they're filling their contracts by selling from buying in the spot market. They said no. What they speculate happened was Traxys was doing arbitrage, and they needed to deliver some contracted uranium. So they came in and drove the price down so they could get that and then sell into it. And that's basically because the DOE is no longer selling surplus uranium in the market. So you've taken 5 to 7 million pounds off the market in the Trump administration that was sold into a falling spot market to buy off 800 union jobs in Ohio at the Portsmouth cleanup.
The supply and demand dynamics in uranium are really quite complex and maybe a little opaque for investors. Is there any way for people to get the information, for example, that you can call people and find that out? What do investors do?
Well, it's even opaque to me, and it's opaque to the people I talk to. All they can do is speculate. I'm talking to people that are inside the uranium buying and selling spot market. They're not the guys that do it, but they're the guys that analyze the market for for companies, and they don't even know exactly what's happening. So it's always an opaque market, and I don't think there's any way that the average retail investor can get much insight into that. Be honest with you, I don't have a lot of insight into it. I do have some sources that will speculate on what's going on, but it's very opaque.
But we should feel optimistic. Now is a good time to be buying, or is it not?
Buying uranium stocks? Oh, absolutely.
Sure.
You know, I bought all my uranium stocks
quite a while ago,
but most of them haven't moved much. But it's coming. We don't know. I can't tell you when it's going to come, but it will come. There will be a uranium shortage at some point. There will be great demands, and the price will go up, and the stocks are very dependent on the spot price and have been for a number of years.
So, and talking about catalysts coming up for uranium, the U.S. is expected to make a decision, I believe, in the next month or so about the Section 232 petition. If it goes through, how could the sector be impacted? Would Canada be affected more or less? What can we expect?
Well, the Section 232 is a proposal that would require on national security issues that 25% of the uranium used by U.S. utilities to make electricity be supplied from domestically mined uranium. So it's going to be, if that passes, if that recommendation comes out, it'll be a big shot in the arm to U.S. producers and developers, ISR uranium. The idea, it's an interesting idea you bring up. I've never really thought about it, that Canada will be impacted. Certainly Canada will be impacted. We will see, if this happens, a stronger uranium spot price, but by the same token, we may see a split, a divestiture of domestic price versus a world price.
Okay.
So it could affect a company like Cameco, who's buying spot market uranium. If the price goes up, it costs Cameco more to deliver to their contracts, and they make less money. So we'll just have to see in that end.
Can you give me an idea of, is there enough production in the U.S. capacity to fill that 25%? Or
it'll take a while to do.
So
we use about 55 million pounds a year. Last year we produced about 1.1 million pounds, less than 2%. Now we were producing about 5 million pounds pre-Fukushima. So you could expect it, I think, to ramp up relatively quickly. You're going to end up with 3 uranium producers: Energy Fuels, UR Energy, and UEC initially. And whether those 3 companies, certainly they cannot produce 10 or 12 million pounds or 13 or 14 million pounds, would be 25%. It's going to take a few years for that to happen, but it will give an incentive for them to produce, and it will at least shoot up a price in the U.S., and you would figure that the world spot market would follow.
Okay, great overview of uranium. There is a huge focus on mergers and acquisitions right now, but as we finish up, I'm wondering if there are any other trends in the resource space that you think are being missed, ignored, investors are not seeing these and they should.
Well, I think the base metal complex, the supply-demand fundamentals for base metals, especially copper, but other things too, like zinc and nickel, are pretty compelling right now. But they've been knocked down or held down by the cloud of U.S.-China trade tariffs. So you look at copper, and if Trump and Xi start making inroads to this, and they already have, we've seen the spot copper price jump 20 cents since the first of the year. It closed Friday at $2.96, which is something like an 8-month high. And that's because some progress is being made. Once that is done, and I'm convinced it's going to be done, and I'm convinced this can be done in the U.S.'s favor because Chinese need the Americans much more than we need them. Look at the relative strength of the economies right now. Copper's going to soar. Copper's going to soar. So if I was speculating right now, I would be buying some good copper companies that will have leverage to the price of copper.
Okay, very good to know. And one last thing, copper is known as Dr. Copper. It's an economic indicator. Would you say, is it the best economic indicator among commodities, or is there something else?
No, absolutely copper is, but it's skewed right now. There's things going on with the copper market that have kind of caused a divergence to a booming U.S. economy, for instance, and that's the overhang, the cloud overhang with this U.S.-China trade talk. And then the other thing overhanging it is all the hedge funds have left commodity space. They're not there. They were massively long copper a year ago. They went massively short in the second half of the year, and by about November, they left the markets completely. So when the hedge funds return, and I think this will depend on some progress on the trade tariff talks, then price of copper will soar, and it will follow more as being Dr. Copper. So it's a bit of a confused and conflicted copper market at this point.
Okay, well, thank you so much. I think we'll leave it there for now. That was great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Mickey Fulp.